Good morning. This is Brenden Rendo with the Homes Orlando team, joined again by Joseph Dionne of Appli Home Loans. And we, of course, we are weekly broadcast that brings you information about the local Orlando real estate market and things that are going on nationally that are affecting the housing market. This morning, want to do a quick recap because there's a lot of news that has come out in the past couple days. Number one, Fed with the overnight rates jacked them up 0.5 point.
Hey, there we go. Just a little bit of movement right there. I mean, that's like the biggest one that they've done in a long, long time.
20 years, something like that. Since what, 2000?
Mm-hmm.
So,
I think that's what it was.
But I noticed watching rates yesterday, the treasuries didn't move hardly at all yesterday. How were your rates affected?
It was actually really interesting yesterday because we went in and, you had a lot of uncertainty, right? And it's like when the Feds meet, you have federal chair, that you got Powell, he getting ready to talk, and what's he going to say? Is he going to say something stupid? Is he going to say something that we all expect? And kind of yesterday went pretty much exactly how we expected it to go. They planned on moving it 0.5%. They moved it 0.5%. They planned on laying out how they were going to reduce their holdings. And we went into that. So we've got a plan going forward. And we actually saw after the federal meeting and the announcements, the press conference, we actually saw rates improve a little bit. Actually, we saw a big jump in pricing, but the day started off a lot worse. So we kind of just, we went from we started the day here, then we quickly went down to here, but then after the meeting, we went up to here. So it's over the course of, from day to day, it was a small improvement, but the movement yesterday intraday was pretty big.
Yep. And I guess they really kind of put together their plan. They've got 5 more meetings this year?
5 more meetings this year. Yep.
And you're seeing different board members suggest different things.
Yeah.
I know you and I suggested that they kind of taken off a 0.75 or a full point increase. But I also read that some of the board members want to push the rates up about 2.75% by the end of the year.
Yeah, and you go into it, it's like Powell, literally in his press conference, he said 0.75 or bigger is off the table. But then, like you said, other members were like, hey, we still need to do this. So it's kind of like, well, we've got 5 more meetings. They're talking about 2.75. Well, if they move up 0.5 point every single time, we don't get to 2.75 by the end of the year. So if they're wanting 2.75, that means a 0.75 increase isn't off the table. Correct.
And it's their whole goal is to drive down inflation. And unfortunately, everything I've ever read is when you get inflation at a certain point, they're saying last reading was 8.5%.
Yeah.
And your rates are sitting down. What are we at actually?
On the federal fund rate?
Yeah. What did it jump to? 0.75 or 1?
No, we're, oh my goodness. I got to double check this. I think.
Yeah, I can't. I say, okay, they added it. What is it?
I think we're at 1.5, I think, maybe. 1.25.
Okay.
I got to double check.
Yeah. You've got to get that rate, above what the inflation rate is.
Yep.
And if you remember, again, going back to the early 80s, Faulkner, first thing he did was, he jacked the rates up. I mean, he got them up to nearly 20% to basically quail down inflation. Because a lot of people are talking what we're going to have for the next several years is stagflation, which is high inflation, low growth. And we saw another part of news, GDP dropped 1.4%.
Yep. And that was for the first quarter of the year. So that's revised. Those revised numbers were actually pretty staggering. Started off we saw 1.5% growth, and then they were like, oh, we saw 0.5% growth, and then the final revision came out and it was like, actually we're negative 1.4.
Yep. And what is it? What happens when you get 2 negative quarters in a row?
That's the official definition of a recession.
Recession. Exactly. But then you get the job numbers today, right? Job numbers don't look bad. There's actually more job opportunities than there are people in the market right now.
Yeah.
And it's just funky. Like we've talked, we picked a good year to start doing a video podcast.
Sure.
Because nothing makes sense. It's all whacked.
We got content for days at least. We've got stuff to review every week, and it's definitely like you looked at today's jobless, and you saw the market react like a lot of movements on my markets, on the bonds and this and that this morning, and then kind of like 30 minutes into it, it's like the jobless claim comes out at 8:30, and then all of a sudden you're like by 9 it's back to like where we closed yesterday, and I was like, okay, well maybe we're gonna have a volatile day, maybe we're not gonna have a volatile day. So really tough to say right at this point, but hopefully it does stabilize out. I really would love to see some of this just kind of settle down for a minute.
Yeah, because one of the things I was reading about, and it was an article by Redfin, I believe it was, or Wall Street Journal, excuse me, is how buyers are attacking this volatility in the market. And one of those things is what we had discussed last week, which is the adjustable rate mortgage.
Yep.
Again, the number of adjustable rates has doubled in the past 3 months. People are looking at that spread, which I think we talked about last week, for a 5-year ARM versus a 30-year fix was nearly a point in interest rate. But the other thing that they're starting to do, and they're seeing an increase in what people pay in what's called points. Can you explain to people what points are?
So points are very simply, it's buying down your rate, right? So 1 point is 1% of the loan amount. So when someone says, hey, I bought that, I'm buying points, they're saying, all right, maybe they're getting a 5.5 if they pay nothing for that rate. But they say, you know what, I'm going to pay 1% of the loan amount. So if it's a $400,000 loan amount, they're going to give the lender $4,000. And maybe instead of a 5.5, they're going to get a 5.25. It'll adjust down. Now, sometimes that cost, it all depends on, it can be a 0.25% for 1 point. It might be an eighth. It depends on where it is and where those sheets are. But that's something that a lot of buyers are doing to get that lower rate.
Are you finding you're getting more people inquiring about possibility of buying points? Or is it something that your team is suggesting more?
So I will say that there are actually where we find like, and you have to deal with, we have QM, we have quality mortgage, we have different things. We have all these different rules on the mortgage side that we find, and we're finding that there's actually a lot of products now where, there's no quote unquote par rate. There's no rate that costs nothing that's available that still meets the guidelines that the government says we have to provide to clients. Now, these are, a lot of those are investment loans and so forth, or like the 15% down investment loan, which is really cool when we're in a low interest rate market. Not so cool when we have all this volatility, because, if somebody wants to do that, they're going to pay, almost 2.5, 3 points just to get any rate available that a lender might have. So not as aggressive on that. Now, everybody's asking about it because they want to get lower rates. So we're providing options to say, hey, here's what it looks like if you pay a point or no point. Here's the difference in payment. And we like to have a full conversation of, does it make sense? What's your plan? How long do you plan to be in the home? Are you doing this? Is that, is paying $4,000 today going to be worth that $27 monthly savings for you? These are all conversations we're having with clients to make sure we're educating them so that they know, hey, what is my best opportunity?
So what you're saying is you're looking at, okay, if I'm paying $4,000, I'm saving this much per month. You're kind of calculating out how long it would take for that to be returned, to get your money back.
Exactly, to recoup. That's 100% it. The cost on investment. And I have a very, I think, for me, I think anything that takes over 5 years is kind of hard to swallow. I just wouldn't I don't know if it makes a lot of sense. But, I can't ultimately make that decision for every client. So I'll show them the examples and go through it. But that's the big piece when we're looking at these is, okay, what's that cost of, that cost to recoup? Does it make sense? Should you pay it down? Is it more about getting the monthly payment where you're comfortable with less, and you don't matter or care as much about the recoup time because you're more concerned about the monthly payment? Or, if you're a borrower and let's say you have $30,000 and that's all the money you have, and your cash to close, if you don't pay a point, like everything you're all in is like 26, but then you want to buy down a point and it's going to cost you 4,000. I'm a lot of time recommending against that because I'm saying, hey, like, you don't want to drain your bank account to zero. I know that it may feel like that, but you want to make sure you have a little bit of a savings here because there's always going to be some type of cost when making a moving into a new home. You're going to want to buy new furniture. You're going to want to do little touch points. You're going to want to, maybe paint the room or maybe put new flooring here or do something. Or you're just going to want to have a couple months reserve set aside so that if something does happen, you've got that money in the bank.
You've got that money. Exactly. Yeah, because the interesting thing in the article is the amount being paid by borrowers has gone up to roughly average of $3,000 per loan. So when you think of an average price of $100,000, which that's probably pretty good throughout the United States, it's showing that a lot of people are, on average, are paying about a point for their mortgage rates now.
Yeah.
So that's one thing to look at. And another thing was with all this volatility that we're having now is I know people are asking lenders, how long can I lock my loan?
Yeah.
Can I do it for 90 days? Can I do it for 120 days? They want to know that flexibility that, hey, I've got everything in, but I'm really scared because everything I see, every time I turn around, every time I turn on the TV news, interest rates have gone up again. The 30-year mortgage just hit a new high in the past 18 years. And it's making a lot of borrowers very nervous. I know for the first time in 7 weeks, the number of mortgage applications for purchases went up, which it kind of makes sense because we're starting to hit that real springtime, end of school. We're getting to the end of school. This is when people want to start moving. If you're going to move, you're going to move now. The north, well, except for my hometown, I think they got 20 inches of snow like 3 weeks ago in upstate New York. I don't miss that at all.
Yeah, reminders of why Florida is amazing.
Yes, exactly. So it's nice to see that the purchase applications are starting to jump back up again. But people are looking at, give me some security.
Yeah.
How is that addressed these days with the locks?
So there's a couple of different things that you can do. And, we have like a lock and shop, program type product. And a lot of investors are introducing this and, they're extended locks. It's basically like 90-day, 120, up to 180-day locks that, we can lock it. They can go find a property and then we have it. Now, the challenge with those programs, right, is those programs are going to be, you do a 180-day lock, you're paying for that lock. Like that's just what it is, right? So, typically that interest rate's going to be 0.5%, maybe a little bit more than the going rate right now. So it's constantly a battle of like, well, what makes most sense? Should we? And we are having those conversations of, does it make sense? Now, if somebody's they're actively putting in contracts every day today, like they're going to find something pretty quickly. Like I'm not like, those aren't clients that I'm sitting there saying, hey, let's jump into that product, because by the time they find a property in a week or two, they're going to be able to get a rate that's going to be more aggressive than that lock and shop program. But for clients that are very, very picky, very methodical, those type of things, hey, it might make sense to do that and evaluate. Now, as a broker, we have a little bit more flexibility because, hey, like if we do a lock and shop for a client and we work with multiple investors, if we come back, they get under contract in a month, we can sit there and pair it up and say, hey, does it make sense to flip to another investor and get that 30-day pricing? Are we able to float down on that lock and shop that we have and get better pricing with the existing lender? So we're not, they're not stuck in the, well, this is what you got. Like, I don't care if the market's way higher. Like, this is what you got.
Yeah. Yeah. So like if you go to a bank where, hey, this is it.
Yeah.
This is all you got. No other choice. That is a great feature of working with brokers, is having that pool to choose from. It really is. So it gives people a couple options, and I think you need that with exactly what we saw yesterday, the increase of the overnight rates, and different members of the board saying, no, I think we need to do this. No, I think we need to do that.
Yeah.
So that unsurety has a tendency for a lot of people just to kind of make them pull back, because there's so much stuff going on. You're seeing the interest rates go up. Inflation's still sitting very high. So people's purchasing power is going down. I think one of the things I read this week is 10 major markets where prices are starting to have declined 2 or 3%. Which some big markets, Chicago was one of the big ones. Memphis, Tennessee, which had just absolutely exploded during the pandemic. They've starting to see a decrease in pricing as well. So I think we're just, with the rates going up, inflation, we've hit our plateau. I really believe we've kind of hit our plateau. What's that?
That affordability,
That's just it. That's one of the biggest concerns. You see a lot of articles about affordability for homes. Even rent is the same thing. The average rent in Orlando right now is over $2,000 for like a 2-bedroom. So does it make sense to buy? Well, if you could find one, that's the whole thing. I checked our inventory yesterday morning, for the first of the month, just to kind of see where it is, and we're still staying at just over 13,000 units available on the market. We've got to see that push back up.
And where does it need to be again to be kind of like
26,000? We're half.
So we're at half of where we need to be.
We're half of where we need.
Okay.
But then we have the frozen people like you and I, we'd love to, move up, or, you need more room.
My 4-2 with 3 kids,
Yes.
I had to give up my office. Well, actually I have my office, but my youngest, he's 9, and he's like, hey Dad, when do I get to move into that room? And I'm like, no. And he's like, that's my bedroom. And I'm like, maybe someday.
Yeah. And you get, you've got people sitting at that 3, even 2.5% who would love to move up. They've got all this equity now. One of a 4-2, same size as mine, updated just like mine, down 2 blocks down the road, just sold for $460,000 in my neighborhood. I just about fell over. I'm like, wow, that's awesome. It's great. But then, I would net about 150. But there's nothing I can find. So people are, I think we're going to see people hold on to the houses longer too. So I don't know what will get it to release, the inventory. It's something that it's just going to take time. It's just going to take time. And, they're builders. I see more and more new developments coming up, but they're just not, they just can't build them fast enough. They really can. So, but anyways, that was, I think, something we needed to address. Let us know what you think. Is it worth buying points? Is it, do you want to see a 90-day lock and shop type program for your security, so that that, hey, when I'm out, I don't have to worry about the rates going up. When I see that news flash, interest, 30-year just hit 6%. That's our next milestone. Having that security, well, I'm locked at 5.5. I'm just going to have to bust my butt and find something to purchase, you know? So anyways, thank you all. Anything else today?
I think that's it. We covered a lot, I feel like.
Yep. Well, you have a wonderful day. Everyone have a wonderful weekend. Take care, and we'll see you next week. Bye-bye.